Alright guys, very quick market video this week, I think. Should be anyways, because not a lot has changed. We're basically where we were last week, although it was a very volatile week. We're right where we were at the end of the week last week. This week's backtest, I'll be honest, it's kind of meh, because I don't know. What I tried to test this week is extended market that gets very volatile. So I put on a 5-day historical volatility, and currently we're at 16. So my kind of theory on this is I've always kind of felt like a market that gets very volatile when it's kind of extended like this. That can be kind of a warning sign. Kind of what I wanted to test. So we're at 16, 5-day historical volatility. What I wanted to do is, so what I did is I set up a range of 12 to 20. So I'm testing everything within that range on historical volatility, and the market closed above the 2.25 20 EMA Keltner channel anytime within the last 10 days. So extended market that gets volatile. So here's the back test. I eliminated duplicates and only took the last signal. And I mean, it's really not that bearish. Like, and this is the thing, when you start back testing stuff, especially anytime your sample size gets relatively large, you'll just, because this has such a strong long-term upwards bias, that's why this column here is so important. This versus all data. This gives you the versus historical averages. We are a little bit bearish, but not like less. It's still bullish, still positive on every time frame, but below historical averages. And of course, we're extended. You're probably not going to get great gains from here, even though a lot of people are. It does seem like a decent amount of people are pretty bullish here, thinking we're going to just ramp a massive ramp here. I think that's unlikely, but anything can happen. So rebalance, I couldn't find any info on the rebalance this month, but it shouldn't be very big. Like, there shouldn't be a massive headwind for stocks this month, so maybe this will be the month that bucks the trend we've seen of selling end of month. We only have we only have 1 week left this month, so maybe we won't see headwinds for stocks this month, considering this is SPX divided by TLT. Stocks are not up a massive amount over bonds this month like they were the last 2 months. Okay, so the VVIX 5-day correlation to SPX is now gone. It's quite negative again. So that's, I suppose, a positive for bulls. Although VVIX is still quite elevated relative to VIX. And this dislocation, if you watch the video from last week, that's still probably a factor. Block trades, there was actually some pretty big block trades in terms of on the buy side, especially on Friday. I've also back tested extended market with very high percentile block trade buying. My guess is this is probably 90th percentile or more block trade buying. And extended market with a lot of block trade buying also is a little bit bearish. It's not as bearish as heavy selling with extended market, but it's more bearish than neutral block trade buying, which is interesting. So even the people operating in block trades can get trapped. A lot of times you see this. This is kind of anecdotal. I don't know how you even test this, but it's rare that the first attempt, especially on the S&P 500, which trends upwards, has such a strong upwards bias. It seems like it's very rare for the first attempt lower after a big run to be the one. So, we've had this big run. This is the first attempt since the March lows, really, for this market to go lower. since that little bit of weakness in March, February, March. This is the first attempt to go lower. Usually it's not that one. Usually we go higher, and then maybe the second or third you have an attempt. Like even here we attempted to pull back and it was a fake out, and then we had the bigger pullback. I don't know, it's purely anecdotal, and I don't even know how you test it, but like even from this October, this big run late 2019, it definitely wasn't this one. That was the first like any kind of significant, I mean, I know that wasn't much selling compared to what we were doing, but still, this is the first attempt to go down. It definitely wasn't that one. This is a bigger attempt. It definitely wasn't that one. And then finally we get to sell. So off the 2019 lows, it definitely wasn't that one. This definitely wasn't that one. Definitely wasn't that one. This was a little bit more of a sell-off, and then you notice how each sell-off tends to get a little bit deeper before you get the real sell-off. And even since the October lows, we've had several attempts now. So now, to me, we're starting to set up potentially for another deeper correction. I still believe that to be the case, although I am shifting things a little bit towards the bull camp, just because they've held up through a period where, typically post OPEX is kind of the period where you do see sell-offs occur. It gets harder once you get past a week past OPEX now. Now we have a little bit of return of gamma exposure. It just makes it harder for the market to go down. Yeah. What else? FANGMAN. I'll show you FANGMAN. DIX. Does take a while to calculate that. It's still roughly the way it was last week. It's still in the 42s for the 5-day average. You can pull up this indicator on TradingView and see it. Maybe we'll come back to this, but anyway, it still looks pretty much like the squeeze metric sticks, which is still holding up a lot better than I would have expected. Part of the reason I'm shifting the probabilities slightly in favor of bulls, but I'm still pretty bearish here. I still see plenty of things that have me concerned here, which is weird for me because I'm typically a bull, so it's definitely weird for me to be bearish. It's a weird feeling. And here's FANGMAN DIX, it calculated. So the 5-day average is 42.83, and yeah, we're currently 42.9 on Friday's DIX. So FANGMAN DIX being strong is holding up DIX as a whole, like I showed last week. So COT dealers did sell pretty aggressively on Tuesday. So we're starting to see this cool off, although I kind of expected at this point to be, down here somewhere with this huge rally we've had, but this has been a little slower than I thought it would be. So it adds to the idea we might have some more upside rally to do, considering we've been beating against that 4,200 resistance several days in a row now. Quite possible we need to go up, at a minimum, do a stop run above 4,200, get a few more bulls on, get the rest of the shorts out, and then maybe we're set up for a sell-off. But it's very hard to time tops. It's hard to time a top on something that does this. It's very difficult. Index put call ratio. This is starting to get concerning for me. A lot of people are saying people are properly hedged. I think a lot of hedges are being taken off at the institutional level. This is the actual open interest. I don't think there's as much hedging as there was. I don't think there's near as much hedging as there was. I mean, it shows clear that this is the entire index options. So you're talking SPX, NASDAQ, Russell. All the index options is now back to levels where it was before we had this big sell-off for the first time. And that's part of the reason we haven't had any big sell-off since March, is people have been aggressively hedged at the institutional level. Now, clearly not at the equity level, but consider that the index options, each contract is way bigger than the equity options. And also, these guys are starting to some extent figure out what puts are on the equity side. And if they start buying puts, especially if we get a sell-off and they aggressively start to buy puts, it can have a feedback effect, and you can get a gamma squeeze to the downside. Gamma works both ways, and you can squeeze to the downside. It is not out of the realm of possibility. Hedge fund exposure did tick up quite a bit, but for some reason this is really delayed now. So this is from Monday. It used to just be a 3-day delay, now it's a 5-day delay. I don't know why, but regardless, this is one of the things I said in all of my videos so far. This is a very reliable indicator. These guys tend to get very bullish near market tops, and of course they're not near as bullish as they were back in November of 19, and that one to some extent worked out for them, although they were still quite bullish at the top. Yeah, but anyways, this is starting to definitely get to levels that confirm my bias a little bit. Just keeping it quite simple, this is just M2 with a rate of change put on it, and we've never seen a rate of change on M2 like we saw last year. So a lot of the historical studies we're looking at, and a lot of the stuff we're using, like past history, to help us guide our future decisions, are a little bit, some of that's skewed, and you've seen that, and you've seen it in commodities markets that are doing things that are unprecedented, and the housing market's doing unprecedented things, used car market doing unprecedented things. I've been looking at cars recently, and it's not a good time to be a buyer, although I'm in the market, so yeah. So even a lot of the studies I've been showing, I think you have to factor this in. Although at some point we're going to price in this M2 increase. Now we've had an unprecedented rally in markets, and certainly in commodities and a lot of these other markets. It's been an unprecedented rally. So at what point is all this priced in? I don't know. I don't know, because I'm not strong in the macro department, and it's just hard to gauge things like this. Does this mean that we melt up quite a bit higher here? I still don't think so. I think we've priced a lot of this in, but I could definitely be wrong. Last week's probability, so I had 55% chance of less than 50 points upside left, and I lowered that just a little bit this week and increased this one, increased this one. I think bulls did show a lot this week. The resilience of bulls on S&P 500 is pretty incredible. As for my trading, last week I told you I went full cash. I did actually take a very small short and I was able to monetize it. I got trail stopped out of it, so it gave back some gains on it, and then I took another short. I had 2 shorts that worked this week, and I didn't take a single long. And in hindsight, I do regret maybe I could have added a little bit on Friday. Early Friday, it did look like a trend up day. Order flow looked positive. I still didn't take any longs. Maybe I should have, but still, I moved the needle up on my account a little bit this week, which is always good. This kind of chop, I think, can do a lot of damage to people's accounts, and I didn't have damage done to my account, and for me, that's a victory. And I could still re-enter here. We're basically pretty close to where I exited at this point, so I may entertain some sort of long exposure next week, but it will not be large. And it could just be simple, some SPX calls or something along those lines, just to keep my risk controlled. Thought of the week, I see a lot of people do this. Don't use your Twitter feed as a sentiment gauge. It's not very scientific. people say everybody on my feed is bullish, or everybody's calling a top, or I saw more people posting that they were seeing too many people calling a top than I seen people calling a top last week. So I don't know. I don't like to use that. It's not scientific. What do you have? Like, I follow around 1,000 people, which is probably way too many. I should pare that down at some point. But so 1,000 people versus the millions of people that are in the market. I mean, that's not scientific. So I don't recommend doing that. Yeah, that's really it for this week. I just wanted to do a quick update. Not a lot has changed. We have seen a little bit of an increase in hedge fund exposure. Dealers are selling on the commitment of traders. DIX is still quite strong, but it seems like DIX in the last few years has been really not good at all for tops. It's like they tend to sell when the selling starts. They don't sell at the top. But hard to test some of that. I haven't really tested it, but that's just anecdotal. Yeah, I think that's it for the week. Just a quick little update. Yeah, probably no video next week, and then we'll do another big video the week after. Later, guys.